Hi, Todd Pouliot, Gateway Financial. Feel free to visit us at mygatewaymoney.com. And again, hit the thumbs up button and subscribe for more great information like the checklist that we have for you today. This is a new checklist that we've recently come out with called What Issues Should I Consider When Funding an Unexpected Expense? Even with the most comprehensive financial planning, there's no way to avoid unforeseen circumstances. When our clients encounter an unexpected expense, they must be flexible and act promptly. It can be difficult to adapt without veering off the course. With proper positioning and communications, we can help guide our clients through the financial aspect of life's inevitable surprises. And being prepared to handle these unexpected expenses helps our clients stay on track despite experiencing upheaval and uncertainty. This checklist will cover four main parts that we must fund an unexpected expense, and it looks at payment strategies, funding sources, tax consequences, and again, the impact on the overall plan. So as usual, I'll share my screen here with you. And we can look at the checklist together. Again, it's a yes/no checklist as normal, but is the expense urgent and necessary? First of all, is this something that you need to have or want to have? Is it urgent and necessary? Is it recurring? Should we set up some sort of automatic plan for this seasonally or annually? And you need to confirm how much time you have to fund the expense. That can lead to a lot of different directions via it's got to be today, it's got to be in 7 days, it has to be in 30 days, and it allows us more flexibility based on that time frame. And explore the key factors that might be offering you more flexibility or allow you to pivot, negotiating those terms where it's possible, and adjusting the timeline for making the payments if possible. And if there's more affordable alternatives to weigh the costs and the benefits of the issue that we're at hand. And is it attributed to a third party? If so, consider if you have grounds to recover under legal action, and that could be through their insurance company or other sorts of options available to you. Funding sources. Is the funding need short-term? Do you expect that the future liquidity event will eventually cover the expenses? Temporary financing options, maybe margin on your current investments. That's one way of looking at taking care of these issues. Also, if you have an IRA, could you take advantage of the 60-day rollover rule? If you're bound behind some different strategies, make sure you have the availability to pivot. Again, that 60-day rule is a very stringent rule. I don't like to use that often. And one of the big rules that we see people get caught behind, and the IRS is a big no-no for. Could the expense be covered by insurance, whether or not be your own in whole or in part? Do you have any liquid assets, so cash or cash equivalents, to fund the expense? That's why we always talk about emergency funds or reserve funds. And do we have access to those? Make sure you also create a plan to replace that emergency fund if that's where you decide to pull it from. And is it earmarked for other goals? So how do we look at the plan and make sure we divert dollars back into those goals as needed? Also, do you have a HELOC, a home equity line of credit? Great opportunity to have one of those available to you through your local bank or mortgage company. And any taxable investment accounts. One thing about those taxable investment accounts is we need to make sure to raise cash to cover the tax impact if we harvest any gains or losses. We do that strategically. And if you're able to borrow against your investments, again, that could be margin to help smooth any tax burden across those tax years. Again, we want to make sure we understand the difference between long-term capital gains and short-term capital gains before we have those discussions. A great opportunity is also that Roth. Boy, I talk about Roth a whole lot, but right now it could be a phenomenal time to look at that Roth IRA as an option. Also, I have another video for you. Will a distribution from my Roth IRA be tax and penalty free? Make sure you watch that video. Be mindful of the impact on your long-term financial plan if you are going to take money out of your Roth IRA. Inherited IRA is another great avenue. Do you have a retirement account with your employer, and does the plan allow loans such as a 401k loan or a thrift savings plan loan? And do you have traditional retirement accounts So look at those withdrawals and whether or not you'll be subject to a 10% penalty if you're under 59 and a half, and review other options within there. Do you need to explore borrowing to cover the expense instead of spending your own funds? Great option. Explore any financial options through vendor services provider. Again, short-term needs, consider using a credit card with a 0% introductory APR. An excellent opportunity there. Sometimes they can go for 12 months or 24 months. And do you have a family member who's willing to provide assistance? Now, be cognizant of this. Make sure it is not, or make sure it is an intra-family loan. Make sure you just write out and document, this is a loan. This is the interest I'm going to pay you back. And make sure you document that that is a loan for the IRS. And really good way to do that. I know personally, I've done that when I was buying my first home with my wife, and we needed to sell a vehicle. So we just had an intra-family loan, and it was a great way to get through that struggle that we had early on in our life. Cash flow issues. Do you need to assess how the expense will impact your regular budget this year? Make sure you understand budgeting very clearly. Any future carrying costs associated with the expense, and any debt to cover those expenses. And after covering the expense, do you expect to have excess cash flow in the future? So make sure you also look at that video. What accounts should I consider if I want to save more? Checklist. Tax issues. Is the expense an unexpected tax bill? If so, adjust your tax planning to avoid large payments and penalties in April, spreading withholdings, or estimate payment throughout the year. We did a nice little video on paycheck stub review that you can also go and look at. Will you withdraw funds from a tax preferred account such as a 529 or HSA? Consider the tax impact on that, and make sure you deal with your tax planner or tax preparer, CPA, or enrolled agent. Will you need to raise cash from your taxable investment accounts? We talked a little bit up above on the other page. And will you borrow to fund the expense, whether or not any interest payments will be tax deductible? Determine if the expense is tax deductible in whole or in part. Again, get in contact with your tax preparer, CPA, or enrolled agent. And is this a home improvement expense? Keep proper records, document any increase in your cost basis. Future tax bills, real estate, auto, etc., increase as a result of this expense. So does this one expense have a waterfall, or does it flow into something else that may increase your expenses? So purchase of a new car, does that increase your auto insurance? And can you control the timing of the expense? Can you delay it to the next tax year or spread it across multiple tax years? And does the method of funding these expenses push your income above certain limits? So if you're withdrawing money out of your IRA to cover this expense, make sure you understand that that may have an effect on your IRMA or Medicare premiums, and understand that those brackets do not align with the income tax brackets, which I still can't figure out why they don't, but that would make it a lot easier on those of us in financial planning and also the tax preparers that are out there. And some miscellaneous issues to consider. Will you need to update any of your existing insurance coverages, such as a new auto? And consider debt relief options, debt management, settlement, or bankruptcy. And do you need to consider any collateral effects of the expense you may have on your financial health, meaning your credit score and your premium rates? A lot of insurance companies are tying credit scores to their insurance premiums now. So make sure you're cognizant of those things. Hey, again, not something we like to talk about, these unexpected expenses, but they're definitely something that we need to keep in mind. And, I just appreciate you being here. Again, don't forget to hit that thumbs up, hit that subscribe button, and we'll keep bringing you these wonderful checklists and flow charts. And you have a wonderful day.